I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Washington has turned the antitrust lights on big tech, but big tech is armed and ready, with millions spent on lobbying and legal teams already in place. Plus, the Trump administration reveals new possible timetables for tariffs against China and Mexico. What could slow down the global trade war? And if you're being inundated with robocalls every day, help may be on the way thanks to a new initiative from the FCC. But could scammers and bogus callers still find a way to get through? First, to our top story, big tech started mounting its defense against U.S. antitrust scrutiny long before the Department of Justice and Federal Trade Commission divided oversight of the biggest tech companies. The Big Four have been spending big on lobbying and have continued to staff their in-house legal teams with numerous antitrust lawyers who've served in the government. In the first quarter of this year alone, Amazon, Facebook, and Google have spent a combined $11 million on lobbying. To discuss in New York, Bloomberg Business Week's Max Chafkin, and in Washington, our Bloomberg antitrust reporter, David McLaughlin. So, David, is there a sense that these companies foresaw what could happen here, possibly given what was happening in Europe, and started to prepare years ago?
Well, you definitely get the sense talking to people close to the companies down here in Washington, outside lawyers in their policy shops, that something like this was almost inevitable. I mean, there was sort of a feeling that some of these companies were resigned to some action in one form or another. And so you had some of the companies sort of pointing at one another about who is most at risk for an investigation. So I think a lot of that just comes down to the fact that this has been so much in the atmosphere here in Washington. There's been so much criticism of the companies, both on Capitol Hill, among antitrust lawyers and economists. You can go to conferences almost once a week, it seems now, where this is a subject that's being talked about.
Max, what are the companies themselves officially saying? I mean, we're getting dribbles from outside counsel, from sometimes sources within the company, but do we have an official party line?
No, I mean, officially, I think these companies are, very conscious of the, of the ways in which they've kind of let people down, and we've seen that messaging come out of, Facebook and Google most clearly, where you have lots of talk of sort of responsibility, and we need the, sort of a renewed focus on our role as society. Just to build on what David was saying, a couple years ago when we saw Mark Zuckerberg going kind of around the country on this sort of weird photo tour where he was, posing with Iowa farmers, everybody's kind of scratching their head saying, what is he doing? And I think in retrospect, it's pretty clear. He was preparing for this coming storm. And I think when you look back and think about, Tim Cook stepping out over the last few years and becoming more of a voice, a lot of these tech leaders, years ago started to realize that this was coming and started preparing and started working sort of the public relations levers.
Interestingly, there was speculation about Zuckerberg running for president back during that tour, which now seems a lifetime ago. David, talk to us about the people that are joining these legal teams. Who are they? They're coming from, the DOJ, former DOJ folks, and elsewhere within the government.
Yes, so many of these companies have hired over the last few years, well before this week's news, a number of antitrust lawyers who worked at the FTC and the Justice Department. And these are people who have experience in conducting investigations into conduct as well as mergers. And they also have very large public relations and policy shops here where they conduct their lobbying on Capitol Hill. And then in addition to that, they all have very prominent law firms, armies of lawyers who would be ready to go to work if this scrutiny turns into real investigations.
In addition to industry trade groups. Now, Max, the idea that we seem to be getting from sources who are talking about the company's position here is that these companies will try to make the case that they are actually better for competition than not, that they support small businesses, that they support competition between small businesses. Do you think Washington is going to buy that argument?
So it's hard to say. I mean, it depends on how you look at it. It is 100% true that, online advertising has created opportunities for smaller businesses. And the other thing that's hard about this, from an antitrust perspective is, antitrust law is, mostly focused on consumer harm. All of these companies, Facebook and Google are offering services for free. Amazon, of course, is all about low prices. It's sort of hard to see how you make an argument it's raising prices. Now, the issue, the vulnerability for these companies is they all depend on these big, dominant networks. So if you want to buy a search advertisement, there is only one company, Google, that will sell you search ads, pretty much. I mean, there's some smaller players, but the amount of market share is tiny. If you want to be in social media, there is one company. If you have an app, there are two options, Apple and Google. So the fact that they have these dominant platforms is going to be, I would predict, the focus of any, antitrust criticism or inquiry.
On that note, David, is there any sense in Washington of how Google, Facebook, Apple, and Amazon have handled the coming threat of antitrust regulation differently? How much are they spending in terms of, differently in terms of lobbying efforts? How are their strategies differing in terms of getting the ears of lawmakers?
Well, in that chart that you showed, their lobbying has increased rather significantly. That's certainly the case for Amazon. I mean, Bloomberg reported earlier this year just the numerous agencies where Amazon is going and talking to regulators. I mean, it's really all over this city. So I think, and that's a lot different than back 20 years ago when Microsoft was under the microscope. Microsoft essentially had no presence here in Washington. That's a long story where Bill Gates didn't think too much about this town then. And I think these companies have learned from that, and you see that in the spending they're doing in the policy shops they have here in Washington.
All right, David McLaughlin for us in Washington, Max Chafkin in New York. Obviously, we're going to continue to follow all these headlines as they cross. Well, two companies that recently went public reported earnings results Thursday. Their shares have surged since trading, posting a sales forecast for the first full year that beat analyst estimates. This is Beyond Meat. The company also said earnings would break even in 2019, while analysts had estimated that the company would post a loss. Meantime, Zoom Video also issued a yearly forecast that topped estimates. Sales in the last quarter totaled $122 million. Coming up, talking tariffs. President Trump's Mexico tariffs are set to go into effect Monday, but the situation is fluid. We'll talk about the latest in the global trade war on multiple fronts next. This is Bloomberg. Shares of Blue Apron tumbled in Thursday trading, at one point falling as much as 7.5%, hitting an all-time low of 63 cents. Yes, now it's a penny stock. The meal kit delivery company has struggled since its results in late April, when it reported weaker than expected revenue and continued customer losses. President Trump making news on his next moves on tariffs while in France. Here's what he told reporters will happen with respect to China.
Probably right after the G20. One way or the other, I'll make that decision after the G20. I'll be meeting with President Xi, and we'll see what happens, but I'm probably planning it sometime after G20.
Meanwhile, a former top Chinese official gave a much more pessimistic outlook on the talks while speaking to Bloomberg earlier.
这是一个非常好的问题。
If the US doesn't want to go to the WTO and they talk with China with a current attitude, things will drag on. That won't be a year or two, that could be even longer. In that case, we'll see who can take it on the chin. China will have to endure that, the US will have to endure that, and the whole world will have to endure it, and the global economy will go backwards.
The G20 takes place at the end of the month in Japan. Meantime, when it comes to Mexico, just a few moments ago, Vice President Mike Pence said the Mexico tariffs will be imposed on Monday. Bloomberg reported earlier that officials are looking for a way to postpone those measures. Still with us in New York, we've got Bloomberg Businessweek's Max Chafkin, and in Washington, Bloomberg's U.S. economic policy team leader Sarah McGregor. So, Sarah, this meeting just broke up between U.S. and Mexican officials. Can you give us more detail on what happened?
So we don't know exactly what the officials talked about, but we do know, we just heard from Vice President Mike Pence that, talks will continue, but the intention from the U.S. right now is to move forward with these tariffs on Monday. Our sources are telling us that there is a chance that the tariffs could be delayed. That's what Mexico is seeking. It just wants to buy more time to try to convince the U.S. that it can meet its demands over its immigration proposals. But, one scenario would be that the U.S. does impose the tariffs on Monday, but perhaps they're short-lived while Mexico comes up with the plan and at least shows some early signs that it's implementing those promises.
And if the U.S. imposes these tariffs, how big are these tariffs? Is it in that 5% range that's been tossed around?
So that's what the tariffs will start at on Monday if they do go forward, 5%, and then they'll rise in increments monthly until October when they're supposed to hit 25%. That's what Donald Trump told us earlier in the week. So, 5%, I think a lot of companies are saying, that's not great, but maybe they can live with it for a short period of time. Of course, 25% is a totally different story, and that's when you're going to start to see, we see notes this week from economists saying that could push within, months or the course of a year, push the U.S. economy, perhaps the Mexican economy, into recession.
Now, with respect to China, the president now saying he's going to wait until he talks with President Xi at the G20. How much hope is there that they could possibly come to terms in a face-to-face meeting?
So Trump today said he will anyways, hold off on imposing tariffs on another $300 billion of Chinese goods, which would be the rest. That would be all other Chinese goods. He would hold off on imposing tariffs on those until he meets with President Xi Jinping at the G20 in Japan later this month. That meeting hasn't been officially scheduled. So Trump's hoping for it. Perhaps there's some early planning stages of that going on, but it's not a sure thing. And so if that meeting happens and talks break down or it doesn't happen, it sounds like Trump's pretty intent on moving forward with those tariffs, which again is just a huge risk to the global economy. We saw the IMF today actually raise its forecast for the U.S. economy for 2019, while at the same time giving a warning that if there's an escalation of tariffs, it's a whole different story. It's going to be, it's going to be a big hit to the global economy.
Meantime, Max, you've got companies struggling in the meantime in the midst of this uncertainty, notably Huawei. We're getting new details from inside Huawei about how they're trying to prepare for this, prepare for potentially a new world order. They've got thousands of developers working on new software, potentially, who knows, maybe a new operating system, which means they wouldn't have to rely on U.S. software. They wouldn't have to rely on Android. What can you tell us about this?
Yeah, I mean, Bloomberg has this report about the round-the-clock shifts at Huawei. I think it's maybe helpful for Huawei to have a fallback plan, but the truth is, if this proposal from the Trump administration to basically continue to prevent American companies from doing business with Huawei, which is an hugely important Chinese telecom and tech company, I mean, that is going to be a disaster for Huawei because they cannot reinvent the entirety of kind of like the global supply chain in 90 days, which is what they would kind of have to do to reduce their dependence. So, for instance, ARM, which makes most of the chip designs, it's a UK company, but they've said that they're not going to be able to do business with Huawei because some of their technology includes U.S. technology, and you just have like so many of the products that Huawei offers are dependent on U.S. technology. Now the flip side is, as China has promised that they're going to retaliate by coming up with their own list of blacklisted companies, it's going to affect U.S. companies in a different way because for most of the U.S. companies, it's not so much a reliance on Chinese technology. It's a reliance on China as an export market, and China as the main growth engine for a company like Apple. So as China retaliates, it's going to hurt these big tech companies as well.
Right. Meantime, Sarah, as the president travels through Europe, he's been touting his anti-Huawei message to UK Prime Minister Theresa May, talked about it in his meeting with the Irish Prime Minister. Do we have any indication about whether his message is being heard?
Well, it was interesting because, of course, some of the leaders in Europe, as you mentioned, they did sort of indicate that they did see Huawei as something that they should consider, under national security grounds. And they seem to sort of agree with Trump that this is worth a closer look. And I don't know if that message appeased Trump a little bit, but he, of course, he sort of lightened his tone as well. He had threatened before to cut off intelligence sharing if they didn't crack down on Huawei like the U.S. is. And he said, we won't do that. But and he took a conciliatory tone that they actually work together to try and solve this issue together. So, that was a bit of a surprise. It was definitely a change in what we had been hearing.
Meantime, Max, we can't forget about the Huawei CFO who's still under house arrest in Vancouver as she awaits an extradition fight. And we've now learned that fight is going to start in January of next year. So dragging out this entire saga for her, stuck in Canada. What can you tell us about this?
Okay, so with this trade war or whatever we're calling it, there's sort of the main narrative, which is the tariffs, and then there are all these sort of ancillary things like the Huawei blacklist and like this extradition case in Canada. Now, the legal case has to do with Huawei, basically allegedly tricking banks into doing business with Iran. So it's a fraud case. It has nothing to do, with the trade war ostensibly, although China has said that, that this is all politics. And Trump has at times indicated that he might be able to work some deal involving, assumedly dropping charges against the Huawei CFO. So who knows? I mean, you could imagine a situation where China and the U.S. reach some kind of grand bargain, and this is a part of it somehow, where there's a compromise, a plea deal, or the U.S. drops charges as part of some kind of larger agreement with China.
Interesting. All right, we'll certainly continue to monitor that one. Max Chafkin and Sarah McGregor for Bloomberg. Thank you both. Coming up, the race to 5G is heating up. But will the next generation of networks be even more vulnerable to cyber threats? We'll discuss next. This is Bloomberg. The Obamas are getting into podcasting. Spotify announced Thursday that it has signed an exclusive podcasting deal with Higher Ground, the production company backed by former U.S. President Barack Obama and First Lady Michelle. This after the company signed a deal with Netflix for a slate of TV shows and movies. Michelle Obama said the podcast will amplify voices that are often ignored or silenced altogether. Spotify will distribute the podcast to audiences worldwide as part of a multi-year agreement. Well, the next generation of 5G wireless technology is expected to transform the world with greater speed and better connectivity. But it will also open new doors for cyber attackers. The U.S. has sought to bar Chinese telecom company Huawei from 5G networks, citing national security risks. So just how safe will a 5G world be? Joining us to discuss, Darktrace co-CEO Nicole Egan. Darktrace develops artificial intelligence for cybersecurity. So there are sort of two sides to this story. There is the concern around surveillance and espionage issues related to Huawei, and then a greater concern about 5G in general, and the idea that if the world is more connected, is it also more vulnerable? Let's answer that question first. Would you agree? Does it open more doors to threats?
Well, I think what happens with 5G is people are moving to it because there is a need for speed, right? People want to get this next generation of applications out there faster, things like connected vehicles. And there's also the need for more throughput. So all of these applications that require video, this will speed it up. So I think there's a lot of advantages, and that's why we hear a lot of buzz and a lot of discussion around 5G. But you're absolutely right. There are a lot of risks that are going to come with it. When you connect more things up, it increases the attack surface. There's just more points for the attackers to get into the network.
And does that mean a harder job for you to protect them because you're now fighting on many more fronts?
Well, I think what's so hard is you already have human security teams that are having trouble keeping up today, and you add 5G to it with all of these points of presence, and it does amplify it. So we're able to use artificial intelligence to actually have all of these points in this new definition of a network kind of self-defend. And that's why artificial intelligence is really going to help customers get ahead of it.
Now, does Huawei in particular concern you?
Well, I think what we are seeing is that this is raising to the forefront the whole issue of people analyzing who is in their supply chain. Where is this technology coming from? So I think it really has changed the discussion. And unfortunately, I think it all seems to always focus around one particular vendor, but really it's shining light on a much broader supply chain attack issue.
When you say unfortunately, does that mean you don't have specific concerns tied to Huawei and its own connections to the Chinese government?
I think they're one of many. And I think it really comes down to not only in telecommunication networks, but in everybody's supply chain. There's technology coming from all over the world. In fact, any given piece of technology might have, either dozens or even hundreds of different providers of component pieces, and you don't know where all those pieces are coming from. So I think it means we have to change the way we look at security, and we need visibility and real-time monitoring to see if all of a sudden something starts beaconing to some other part of the world we didn't expect it to.
So is China of a particular concern more so than other countries? Or are you saying technology in general coming from anywhere in the world?
Well, I think that the attacks can come from anywhere. I think this bridges really to the broader topic of there are some kind of impacts of nation states and the styles of attacks rolling over into the organized cyber criminal ring. And so that kind of correlation and connection between nation state activity and cyber criminals is coming to the forefront.
So how can we use AI? Can you use AI to detect cybercrime, to protect in a more connected world?
So I think the first part is using artificial intelligence to understand normal. So we actually embrace the principles of the human body's immune system. Our skin keeps us safe, but sometimes bacteria virus gets inside. But the most important part is the effect of AI fighting back. So this is going to become a full-on war of algorithms against algorithms, and you're going to need to have AI algorithms that can fight back in real time.
So Baltimore's government computer systems recently faced a ransomware attack. Are you seeing these attacks become more sophisticated, or are some of these folks using the same old tricks essentially?
We're talking about things like 5G and digital transformation and all this kind of new innovation. I think what Baltimore points out is you also have to get back to basics. You have to have good cyber hygiene. You have to keep your systems, patched and up to date.
All right, Nicole Egan, co-CEO of Darktrace, thank you so much for joining us. It's a scary, scary world out there. Coming up, President Trump plans to announce tariff decisions after the G20 later this month. How Apple could be at the core of this decision. Next, this is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Apple is front and center in two of our biggest stories today: the U.S. government's continued antitrust crackdown on big tech and President Trump's tariff decision, which he has pushed back until after the G20 summit, which takes place later this month. In Wedbush Managing Director Dan Ives' latest note, he said while many U.S. companies are impacted by this latest trade tension, the poster child for the U.S.-China UFC battle continues to be Apple. These latest tariffs could significantly increase the cost of iPhones, supply chain disruption globally, and have a major negative impact on street numbers across the board. Ives joins us now. So, Dan, you also say in this note that so far it's been more noise than reality. What do you mean?
I mean, what I'd say is through this week right now, iPhone demand in China is in line with expectations. And I think despite worries that they're burning iPhones in the street, thus far, I think expectations are sort of in line with what we're seeing for Apple. And that's the key. Right now on the demand side, obviously there's worries about what's on the horizon, but thus far, I think it's been minimal disruption, especially on the supply chain side as well, which is key on Foxconn. And so thus far, obviously the stock's factoring in a call it 15-20% earnings hit when you look out over the next year. And we think right now we're looking at something that's pretty de minimis relative to the fears.
That said, what is the worst case scenario for Apple and the iPhone in the trade dispute?
Yeah, worst case. So first, you put the $325 billion tariff on after the G20. That would have what I would view as anywhere between a 10 to 15% negative EPS, sort of implication if they don't pass any of that through. So that would be negative on the supply side. And then fundamentally on the demand side, what would that do potentially to demand? You have called 60 to 70 million iPhones that are coming up for an upgrade in China over the next 12 to 18 months. That could have potentially a 10 to 15% impact there on demand. So that would be what I view as the draconian worst case scenario. And I think right now the stock is really reflecting that, which is why, in our opinion, you buy this name here, because if it's anything other than draconian, the stock rips from here.
Interesting. All right. You've also got a note out on Cloudera, shares of that company plummeting, weak demand, weak outlook, the CEO retiring. What's happening there?
Yeah, it's a nightmare on Elm Street situation happening in Cloudera. I mean, if you go back, Cloudera with HornorWorks, that was really the merger that they were looking at Hadoop to consolidate, focus on the cloud market, and it's really been a disaster story thus far. When you look at the visionary, the CEO, Riley, who's leaving, sales execution issues, and it's really been a 1 + 1 = 1.5 situation thus far. I think right now, investors are really wondering, does the board decide to maybe put this thing up for sale, look for a financial buyer? That would be the best case. Other than that, this continues to be sold at a $5 to $7 stock in the near term.
So what would you hope to see in a new CEO?
Well, I think a new CEO, you hope that they put a for sale sign on the house. Because I think right now you need a financial buyer to sort of put this thing together, cut the cost, and ultimately that would really be the Goldilocks scenario here. If a CEO comes in and tries to turn this thing around, it's going to be arduous. I still think there's a big market opportunity here, and I think maybe investors are getting a bit too negative. But in terms of what we saw last night, that was the trifecta of bad news. So you don't want to see a CEO and a board make some serious decisions here if this is something where a financial buyer and a strategic process ultimately is on the horizon.
Meantime, got to talk about Uber. Shares rallied yesterday, actually hitting their opening IPO price, but then slightly dropped today. There were some positive coverage notes out. Do you still continue to believe in the long-term valuation story? And if so, how long does it take to get there?
Yeah, I do. I think you're starting to see that stock get some sea legs, and you're seeing it lift as well as investors are better digesting the ride sharing valuation where ultimately this thing could play. When you look at Uber, I continue to view it as a sum of the parts story. And most of my conversation with investors, that's how they're viewing it. I think it's going to take time, but ultimately we still think a $100 billion valuation for Uber over the next 12 to 18 months is they'll be on that path. And I think right now the big thing for Uber is really that pricing war with Lyft starting to subside. That's hurt both companies. And I think right now that's really the key on Uber. And remember, they're not really, if you think about U.S.-China battle and some of the headwinds there, they continue to sort of be insulated there. So I think right now this is a story that's starting to move in the right direction after what's been a massive sort of white-knuckle period for both Uber and Lyft.
All right, Dan, always love your colorful metaphors here on this show. Dan Ives of Wedbush, thank you. Well, Vox is a digital media empire with millions of monthly views on its various sites. But on Thursday, those properties like SB Nation and Curbed went quiet. Staffers staged a one-day walkout to pressure the online media company to sign a union contract. Bloomberg's Josh Idelson joins us with more. So give us the backstory here. How did we get to this place?
So it's been 14 months now that Vox's new union has been negotiating with management to try to reach a collective bargaining agreement.
And why was the union formed in the first place?
People say they want to address issues like starting pay, particularly for newer workers, for people writing there that are women and people of color that some argue are not overall getting the compensation that they deserve there compared to others. They say they want to address issues with severance. They've brought up issues around compensation if people's work gets converted into TV or movies. And they were able to get recognition from Vox Media within a few months, but getting a contract has been slower going.
Why is this happening at Vox and not happening at other media companies?
Well, it is happening at a number of other digital media companies. We've seen an industry with a lot of convulsion and brand sensitivity that makes it more vulnerable to public pressure campaigns. There's been a wave of everyone from Gizmodo to Huffington Post to The Guardian organizing and folks obtaining union recognition.
So what's next? I mean, what are the unionizers asking for?
So they say there are still outstanding issues in terms of compensation and severance that they want to see resolved. In an email that we obtained, the CEO of Vox Media said that he's as serious as he could be about reaching a deal, but he also said, in his words, that it's not smart and realistic to pay people much more than the market rate. Those were comments that drew a new round of criticism on social media.
Interesting.
So the sides are still apart in this area, and escalation beyond this one-day walkout could take all kinds of forms.
You had layoffs at Vice, layoffs at BuzzFeed. Do you sense that there's a consolidation in the new media space coming?
That is a fear. Certainly, people are concerned about the change to something like the Facebook algorithm, how that can overnight change the business models for some of these companies. And that sense of precariousness cuts both ways. It intensifies some people's fears about organizing, but it also gives some people a reason to organize.
Could this expand to tech? I mean, we've seen 20,000 employees walk out of Google for different reasons, for how the company handled sexual harassment, and certainly tech employees don't necessarily complain about being underpaid, but could this sentiment spread to other industries?
Sure, it could. And we've seen, as you said, a real wave of activism of different sorts among tech staff. We've also seen at Kickstarter, for example, that people have translated that into trying to form a union.
All right, Josh Idelson, who covers workers' issues here at Bloomberg, thank you so much, Josh,
thank you
for your reporting. Coming up, Google announces a multi-billion-dollar deal to buy data analytics firm Looker. Is it the right time for M&A as antitrust scrutiny ramps up in Washington? This is Bloomberg. At a time when big tech is under a microscope with the U.S. government, Google is looking to expand. Google has agreed to buy business intelligence and analytics platform Looker. The price, $2.6 billion in cash. Looker gives Google a new tool in its campaign to sell more cloud storage and software. It has struggled to compete with larger rivals Amazon and Microsoft. Joining us to discuss, Bloomberg Tech's Garrett DeVink, who covers Google for us. So Garrett, Google hasn't made a big acquisition since Nest back in 2014. So why now and why Looker?
And I'm not even sure if I would call this a big acquisition, at least in terms of Google's size, right? I mean, $2.6 billion, definitely a lot of money. But when you're talking about the cloud world, where we've seen acquisitions such as GitHub and Red Hat just in the last, 7-8 months, this is pretty small. And I think there was a lot of pressure on Google to do something to kind of expand its size, at least from the analyst community, investor community. And, we can all debate whether Google actually cares what those people have to say. But this acquisition was maybe not as big as a lot of people were hoping for or expecting. And, as you explained in the intro there, I mean, this is sort of just a bit of an incremental change. It's a product that many Google Cloud customers were already using, and they'll now be able to sell them together.
Meantime, we just were looking at some graphics there showing past Google acquisitions, and one of their biggest acquisitions, Motorola, didn't turn out so well. Some would argue that the Nest acquisition hasn't been a success. Otherwise, DoubleClick, YouTube, potentially Waze, all YouTube for sure, DoubleClick for sure, turned out to be phenomenal acquisitions. But I wonder if Google is scared of its own track record.
Yeah, I mean, I think, Google generally believes that it can solve its own problems, right? I mean, this is an engineering-focused company. It's a company full of, essentially the smartest people in the world who think they really have the right answers for things. And a lot of products that they've developed in-house have also been really successful. Chrome and, of course, search ads, which is potentially one of the most, successful tools ever developed in history, at least if you look at pure profit. And so I think generally the attitude within the company is to build rather than buy. But of course, not all solutions you can build on your own.
Now, of course, Google is third to Amazon Web Services and Microsoft in the cloud. They've got a new CEO, Thomas Kurian, who you spoke to today. Kurian told you, many people asked us for many months, are you rushing to do acquisitions? We've been very disciplined in building our sales, go-to-market capability, our own products, and we've chosen Looker as a very complementary technology that a lot of customers will find value in very quickly. What did he have to say to you about buy versus build when it comes to gaining share in the cloud market?
Yeah, I mean, obviously, Thomas Kurian would not tell me what his acquisition strategy is, what his M&A strategy is going forward, but it is true. I mean, most of what he's been talking about, despite being asked about M&A to his own admission, has been about, building his own sales force, focusing and narrowing Google Cloud's focus on a few specific industries, and really getting really good at selling into that, right? As I said, Google is an engineering organization. They haven't always had, a strong sales culture. That's what he's trying to build. And I think truly, I mean, if we take them at their word, that is going to be their focus right now. And maybe these more bolt-on, smaller, incremental acquisitions will be the norm rather than a large transformational one.
Meantime, right, you could call it a smaller, more incremental acquisition, but at the same time, you've got Washington turning the screws on big tech, examining potentially Google and Alphabet for antitrust issues. Is now the right time to be doing a deal like this?
Yeah, I mean, I think this deal obviously was under works, obviously before this weekend when we saw the latest news about a Department of Justice investigation into Google regarding antitrust. I think it's important to note that in the cloud, Google isn't dominant at all. They're far behind Amazon and Microsoft, and they've had trouble closing that gap, and they're still very, very far from meaningfully catching up to those two companies in the cloud space. So I think, truly looking at cloud is not going to be the approach that regulators will take. But of course, in this political environment, facts don't really matter that much. And I'm sure that there will be at least some people who use this as another sort of political point to try to show that Google is either thumbing its nose at regulators or that it's just getting too big.
All right, Bloomberg's Garrett DeVink, thank you so much for your reporting. Sticking with Google now, the tech giant is attempting to lead the way in the nascent business of game streaming through the internet. Google has announced pricing in a raft of new titles for its Stadia service ahead of competitors. Access to Stadia's library of games will cost $9.99 a month. A free version will let people buy games outright and play them through the system. I spoke with Google Vice President Phil Harrison earlier and asked why people would pay for this new service.
I think what we are offering is an incredible value for gamers, because remember, they don't have to buy any hardware. There isn't a custom game console or high-end PC that normally costs hundreds of dollars that they have to get. For $129, you get a controller, limited edition controller, you get a 4K streaming Chromecast, you get the full Destiny 2 experience from our friends at Bungie, and 3 months of Stadia Pro. It's an incredible value. And then gamers can play the games that they want to play without having to go through the hassles of downloading and installing and patching and updating and all the rubbish that sits around traditional consoles and PCs today.
But don't you think we're facing a bit of subscription overload? I mean, with all of the entertainment streaming subscriptions, certainly there are many other gaming alternatives. What's going to convince gamers to choose Google?
Well, I think what Stadia represents is a phenomenal value. The games that gamers will get to play, they can use on any screen, their TV, their PC, their laptop, their tablet, and their phone. No other game service does that. So the value is incredible. But we also recognize that not everybody wants to subscribe. So in addition to the Stadia Pro, which is $9.99 a month, there's Stadia Base, which is free, and they can buy the games and play them when they want to.
Are you trying to get exclusives?
Of course, yes. We have recently announced the formation of Stadia Games and Entertainment, which is our dedicated game development organization, led by a very renowned industry veteran, Jade Raymond. And she will be building out our exclusive content for Stadia. Plus, we're working with a number of third-party companies to bring their games to Stadia exclusively right now.
So game streaming's on the rise. You've got Microsoft and Sony doing something together in partnership. You've got Apple Arcade. Potentially your price could impact the price that they decide on their services. What are you expecting from the competition, and how are you positioning yourselves relative to them?
Well, first of all, I think this is just a general trend and a general movement in the industry as we move towards a streaming future. The technology is there now, and obviously Google has some extraordinary capabilities in this area. We've been investing in data centers for 20 years, and so Stadia is really standing on the shoulders of giants of the technology that built and created YouTube and a lot of other very, very high-performing services that serve billions of users around the world. So the timing is ready now to deliver a very, very high-quality experience to gamers. Stadia allows you to stream at up to 4K 60 frames per second. That's only possible because of the innovations that we've made in the data centers.
Do you think game streaming will take over before there's a new generation of consoles?
I think game streaming gives players an alternative, and I think it is definitely a future direction for the industry, but it isn't going to happen to everyone overnight. And so I think that the good news is that the innovation means better games, it means better content for players, so what a great time to be a gamer.
Does the innovation also work with multiplayer games? I mean, there's some skepticism that streaming will work on a multiplayer experience, be better than a console, be better than a computer, and can you do it better than Microsoft and Sony?
The great thing is that when you have a streaming technology, the multiplayer experience is even better because all of the players are on the same technical back end. They're all inside the Google back end. All of the players are connected via the same proprietary Google technology using our own fiber networks, of which there are hundreds of thousands of kilometers worldwide connecting all of our data centers. So actually the experience for multiplayer will be far better than you can get on traditional historical platforms.
And how would you rate the experience now? I mean, this is a technological problem, right, that you've been working on. How much of the kinks have you worked out? How seamless is it?
We've been working on this for a number of years. We've been testing privately inside of Google for a number of years. We tested very publicly last year with Project Stream, partnering with Ubisoft to bring Assassin's Creed Odyssey, which is a very, very demanding, graphically rich title. We learned a lot from that experience, testing with hundreds of thousands of people. And now what we are able to do is to innovate even more in the way we compress the data and bring that high-quality experience into people's homes.
Phil Harrison there, Google Vice President. Still ahead, the US FCC is cracking down on unwanted robocalls, but will it work? We will discuss next. This is Bloomberg.
A list of top robocallers includes Capital One, Comcast and Wells Fargo, all of whom use robocalls to chase debts. And sometimes they do that a lot, as this woman can testify.
Some days, such as in January, Lee says Wells Fargo rang her more than 20 times a day.
That's absolutely ridiculous, because what is the point of calling someone 20 times a day to collect a debt? Oh, this is actually great timing, because while I couldn't pay you 45 minutes ago, a small propeller plane full of unlaundered drug money just crashed into my den.
That was an epic monologue. John Oliver's point, pretty universal. Nobody likes robocalls, and the good news is you may be getting less soon. The US FCC voted unanimously Thursday to allow carriers to block robocalls by default. This is opposed to waiting for customers to sign up on their own, but experts warn that under the order, scammers may still be able to get through. Joining us to discuss, Bloomberg's Todd Shield. So, Todd, first of all, will this work?
Yeah, it'll work. It'll do better. It'll grant some relief to consumers because the companies can now move ahead and do the mass blocking without having to ask permission from every individual customer. So they can put a big computer algorithm on there and go after phone numbers that suddenly emit callers that suddenly emit high volumes of calls when they haven't before, or a lot of calls of short duration or calls that are never answered. So they're going to have an easier time smiting those. But on the perhaps it won't work side of the ledger, they're not required to do this. So we'll have to wait and see whether the companies actually pick this up on a large scale.
FCC Chair Ajit Pai said today if there's one thing in our country right now that unites Republicans and Democrats, liberals and conservatives, it is that they are sick and tired of being bombarded by unwanted robocalls. We hear you and we are on your side. Now, here's my question. I have an app on my phone that automatically blocks robocalls. Why haven't the phone companies done this before? Why hasn't the FCC already ruled on this?
Well, there's a long history of FCC law that tries to prod phone companies to go ahead and complete all calls. There was some controversies in recent years about calls to certain rural areas not being completed for various technical reasons. So it's a little bit of a sea change to say, rather than prodding you guys to do a good job and complete every dialed call, we're going to give you an okay to block some of them. And this gives some people the willies. The debt companies, for instance, the credit unions today issued a statement. They're worried that their calls aren't going to go through. Now, the people who are getting 20 calls a day, a la the John Oliver clip, probably won't mind that. But if you're getting a reminder to pay your mortgage or your rent checks a little later, whatever it may be, you may want to get that reminder. So it's kind of a two-edged sword here.
So quickly, are the carriers happy about this? Because doesn't this mean less business?
Interesting reaction from the carriers. Verizon said they're going to take advantage of it. AT&T took note of the vote. The big trade groups said, it's up to the individual companies. So we don't know. They may fear liability for blocking calls that should go through.
All right, I'll be watching my phone to see if this helps.
Yeah, good luck.
Bloomberg's Todd Shields, thank you so much. That does it for this edition of Bloomberg Tech. We're live streaming on Twitter. You can find us there at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.